Hello, 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 everyone. How is everyone doing today? The chop, chop, chop continues. FOMC meeting minutes. How's everyone doing? I don't know what's going on though. Daniel beat Patrick in. Hey, Daniel. Hey, Patrick. Good afternoon. AP's World. Yep, choppy, chop, chop, chop. Connor posting the Apple sale at the bid. 5,300,000 shares. Good afternoon. I think we're out of the stuck zone. I think we're right in the middle of the stuck zone. I don't know what chart you were looking at, but I see us right in the middle of the stuck zone. Good afternoon, Jacob. Good afternoon, Raw Palms. 39.64 to 4,300. That would be quite a move. We're all going to need seasickness meds to keep trading in this market. There are some decent setups today, but if you're longer term, I wouldn't be forcing anything. Anyone see a huge Q2 jobs adjustment? There could be one at the end of this first quarter. Powell won't let us above 4,100 anytime soon. And hey, Ted. All right. Sorry, it might be a little worse for wear live stream. I'm dealing with a really bad migraine. See, look what this market does. It gives me a friggin' migraine. Hey, howdy from Texas. What part of Texas, Jason? I've lived in 3 parts of Texas in my life. Good evening, Anissa. So what part are you from there? Let's see. We had ISM manufacturing PMI coming in at 48.4, so below consensus and below forecast. Still in contraction. Bigger thing while I was watching was the ISM manufacturing prices I talked about this morning, coming in all the way back down to 39.4. Big collapse in ISM manufacturing prices, which was bullish for the market. Bullish for the market. So you're Tyler, Texas. Very nice. Very nice. So, yeah, I've lived in Houston, Austin, and most recently was in Dallas. Well, just north of Dallas in Prosper, Texas. Prosper, Texas. So, that was the big thing. Employment's still strong. Employment back to expansion in the ISM. So, strong employment and prices coming down, which would somewhat point to a soft landing but beyond those numbers, if you really dove into it, it was not very bullish. The FOMC minutes, I think the trend is the markets still don't believe we're in hawkish. We're not looking to cut rates this year. We're going to keep them high. You know, Kashikari came out this morning wanting 100 more basis point hikes, so that would be on the incredibly hawkish side. We'll take a look at the Fed Watch tool in a second. Tomorrow, we have not non-farm payrolls, but the jobless claims tomorrow. I know the title to this says non-farm payrolls because Friday we do have non-farm payrolls, unemployment, everything coming out then. So that can definitely be market moving since this is the final non-farm payrolls release before Feb 1st. So that's going to be important if we stick in the range tomorrow. And I'd be more expecting a fake out tomorrow, if anything. But we do have initial jobless claims and continuing jobless claims at 7:30. So 1 hour before the open. So we will have to keep an eye on that. Other than that, we have the smaller to medium firms for the composite PMI and the services PMI is coming out tomorrow, both forecast in contraction. The last print was in contraction for both of them. That's 15 minutes after the open. Okay, that can potentially have a little move. It could actually reinforce a move already going on. And then for crude traders, big drop in crude today, hitting a second target on the double. We had tomorrow we have all the EIA numbers. And do not forget, we got Bullard speaking, Bullard the Hawk, at lunchtime tomorrow. And that could potentially be market moving. The markets seem to still be shrugging off that the Fed is going to hold steady, hike and then hold, hike and hold still. So, George, that is a daily cash S&P forming a rounding bottom, also 5-minute double bottom. You want to talk about a 5-minute double bottom? I wouldn't call anything. We can look at the cash in a second. CBOE noted significantly higher in the money put activity in the last quarter last year, which has led to skewed put call ratio lately. I was reading stuff about that. Is NASDAQ 4-hour head and shoulders still valid? We can check on all those things. Stock market, Microsoft taking in the shorts after the downgrade today. Google selling off. Amazon slightly down. Tesla did rally. Apple rallying. The semis rallied, but this is sort of deceptive if you look at the chart. This is deceptive if you look at the chart. Financials strong today. Actually, oil and energy was mixed, sort of, which surprised me after the pretty decent sell-off. Healthcare pulled back in some healthcare plans today, but overall healthcare manufacturers were mixed. Pfizer pulling back at 220 basis points. Sectors, every sector except energy was positive. Energy was down 2 basis points, so pretty much neutral. This, though, when I'm seeing the consumer cyclical leading the sector rally with the market going nowhere, if we get something the market takes with the job reports where the Fed has to stop hiking or starting sooner, we can see the breakout. But now we're almost leading with this consumer cyclical and real estate leading the move up. It's leading me, and with our relatively still flat, it's leading me to watch more significantly for a potential downside break. But it will watch the key break levels because it's only slightly to the downside break. 70% for the 25 basis point. Okay. That's been pretty much baked in, dipping a little, rallying a little. But what's interesting, that takes us to 4.5 to 4.75. March is the highest probability is another 25. So 25 in Feb, 25 in March. And then for May, you're looking at an equal distribution. Okay, that it's either a 25 or a pause. Those are pretty close. So the market's, though, taking it seriously that, hey, there could be 2 more hikes. 2 more hikes, 50 basis points more coming in, distributed between February and March. So we're going to be paying attention to that coming up, especially with some Fed speak. Also, there's a Powell speech scheduled for, I think it's next Tuesday. Can somebody verify that for me? Still in fear mode. But I talk about this with a fear mode in consolidation. Tomorrow, after the close, there was nothing. Tomorrow, we got Walgreens, Boots Alliance. I'm really going to be looking at Conagra, Constellation Brands, especially Constellation Brands for some inflation and passing it on to consumer. So that's what I am looking at, but those are minor. They're not going to be market moving, but they're going to be informative for me. And then after, there is nothing. I mean, unless you're into self-help stuff, Franklin Covey. But there's really nothing Thursday and Friday. So, overall, the 38.67 level, where are we trading? 38.68 right now. We rallied up, hitting also the rotation zone, which is held. We're actually getting these pulled down out of the way, so everything could be out of the way. You see here, rotation zone, rotation, 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 rotation. So still holding. But that 50 EMA, which is really key, is 39.06. So we're still watching that 3,900 area for the breakout. That's still the breakout area. Intraday, let me just point out a couple of things. I want to do a little teaching moment here. So this is why I love this pattern. We'll get to all this. Hey, Charles. Evening, Charles. Oh, boy. You really want to get into the minutia on these things. You just want to get to the SPY? Why? What? So you can then... so you just want the spider analysis and then drop off? Here's kind of things. Here's why I love this play. So you see break above, back down, break above, back down, break above, back down, sell off. You know, I started getting a little momentum bar in here, but here's the kind of play I look for. And I've talked about this again, but this is great. So if you're trading just breakouts, I'll give you another tip. If you want to try to front run things with just breakouts, what I like to do is put on an even number of positions. Like, let's just go with 2. And I roughly gauge, you know, in this kind of volatility, you can get 3 and 4 points out of it on a break. I generally like 2 to 3 points for the safety. So I put, you know, a trigger on a quick break triggers an exit half. Let's just call it 3 points higher. And then the stop goes slightly above 3 points. So if it down. So worst case is if I get faked out, breakout, I'm stopped. But I've already got off partial. So if I'm going to try to play it that way, in, unwind partial, stop, raised, and then if it turns around, I'm done. My preferred is this. Break above. So we've got this. You can see the key level here. You can see the key level. Break above, retest, rotation up, and you also off to the races. Now, yes, you got some momentum off this. Little double top. I want to show something else here. Little double. Really nice in the 15-minute. You know, my thing is switching to the 15-minute as you get close to, you know, after 10, closer to European session closings. And you got a little double. Great. Now, you don't know you're going to get this kind of reversal, but it's great for profit taking because you got some momentum bars. Now, this technically, on a higher time frame, rolls, because this is one side, even though it was a little mini double, this is one side of a double in testing I've done. This was the other spike side. You can see it even though I don't trade the 30-minute. I like, if I need to, I'll verify it. You can see it clearly on the 30-minute. So now you have a bigger reversal pattern. Okay? Bigger reversal pattern, triggered, and there were the targets on it. And then it was just, this was pretty much a balanced day. If you're, you know, following stuff, it was an unbalanced day. So roughly, you know, break up, break down. And this now is, I know it was asked, is this a little double? I guess this is the one you're referring to, a double here. It's cleaner on the 15-minute, but you got to measure it out. So, is this a double? No. Why? Because the second and third target, this is the move that started it. This is not a double. So that cannot be traded as a double. If you're going to try to trade a break from some of this key resistance, you'd have a stopping point here, breakdown zone, a key target here, and then a key target here. I doubt I could get risk reward off of that. So is that a double? No. Hey, options 22. And it doesn't have to be, it could be a 1-bar pullback, it could be a 3-bar pullback. What I wanted people to start watching for, and this is not, you don't have to be trading a 5-minute chart. You could do the same thing on a daily chart. But this is the kind of thing you see, a resistance shelf or a support shelf that it breaks below and rolls over. See how well defined this is? And you got people sucked in and then stopped. Then you get the move above it, the retest, and then the little launch move. Learn that kind of pattern on whatever time frames you do. You could trade this on weeklies. This could have been weeks of data. Break above it, retest, and a break. That's a pattern to get etched. It doesn't have to be a 2-bar pullback. It could be a 1-bar. It could be a 3-bar. And it's really nice. It's why I like the concept of the rotation zone on the time frame you're following. See how the rotation zone catches up? So not only do you have just pure price action, you have the return, a little pullback to the rotation zone, and then boom. It's a fantastic setup to learn. It's just easier for me to spot point out on a 5-minute chart since it happened today. By the way, inside bar today on the S&P. Nothing has changed with my macro analysis. Breakout still right around 3,900. A little more conservative, 3,906. Breakdown, early warning is below 3810, 3808. Locked in below 3788. Other than that, sideways. Overnight, you just got your chop back and forth. Breakout for me overnight would be above 38.97. Early warning breakdown would be below about 38.30. Anything in here is too short to talk about on this live stream. I did get asked about the cash S&P. Is this a rounded bottom? You're trying to force something there, which is, it's sort of a rounded bottom. But that's only because of the more limited trading in the cash versus the futures. You're still just in consolidation. Yes, it has had a slight, during the U.S. session, a slight upward bias over the last few trading days. But to call this a significant rounded bottom would be trying to force a breakout to the upside. We already have the breakout or the breakdown pattern. And it's literally, there is not a great setup so far to the breakout or breakdown pattern. The NASDAQ, though, is still, it's tested this key level, this 10,860 level, 3 times now. And this was not incredibly bullish day on the NASDAQ. So my early warning sign is if the breakdown now, this could lead to some sell-off if we get down below that 10,860, 10,850 area in the NASDAQ. We could see some pretty decent acceleration to the downside. Looking at anything shorter is just an absolute mess. So from my book, it's still about 11,180 for the breakout zone. The breakdown zone, 10,850 to 60. 10,857 is pretty close. Oops. So that's where that sits. The Dow, I mean, a slight up close inside day. Still gone nowhere. Still watching for the Dow slightly now. If you want the upside bias, the Dow actually has this the strongest upside bias for basing closer to a breakout trade. So on the downside, I'm watching the NASDAQ. On the upside, I'm watching the Dow. Very boring besides that. Russell is just a mess. But you see the key levels I'm still watching. Below about 1760 breakdown, above 1797 breakout, inside bar on the Russell. Let me just jump to the spiders real quick. Inside bar, again, you had the breakout above here for running into the double top, completing the double top, actually then forming the bigger double here. No, and not a double bottom on the spiders either. Based off the price action today, I'm bumping up my breakout zone closer to about 386. Breakdown zone's coming down just a hair to about 379. Other than that, nada, unless it's some really good short-term setup. So that's it. As long as we're in this silly range, nothing. If you do get the breakout, you got to be real careful, though. You got that 50 in the way. And the Qs, just to round out, another inside day. I'm bumping my breakdown zone lower, or breakdown zone lower in the Qs, right about 262.25. Breakout zone still saying 268.50 area. Other than that, no, not a double. Early warning would be above about 267.50. Early warning to the downside is about 263.50. You can see this is just an absolute mess. So, let me get back. Rich asked about a head and shoulders in the 4-hour head and shoulders. 4-hour. This is just a horrible, sloppy mess at this point. So, no, I personally, this really screws it up. I would not use those targets because it would be way lower probability. If you're going to try to play something in the NASDAQ, I'd use the other side of the rotation zone on a break up as stop reduction. And then roughly around 275.50 as a first target area. That would be on the Qs. On the NASDAQ, this, you got this, no, it's just too big a mess in there. So that would be a very forced trade. DAX, by the way, still closing in. I'm starting to watch very aggressively for a topping pattern in the DAX now. Very aggressively for a topping pattern. That does not mean it can't go higher, but I'm focusing on a pretty substantial topping pattern coming in on the DAX. So that's about all that needs to be said right now. Notes rallying, even did not sell off after the FOMC, which the yield curve is dropping back down substantially because the shorter term yields are holding firm besides the 3-month yields, which rallied strong today based off the FOMC minutes. But there's just not a great setup just yet. Dollar index, nothing's changed, stalling out at that first target on the double. And then just nothing. So still keeping an eye on that. Crude, that was the trade of the day pretty much, with this just triggering, and then tanking down. Still watching to eke out a little more to the downside, especially I'm still watching now to tackle the 71.50 area with the close below 62.5. The only thing, if you're shorter, yes, you have a sort of a sloppy little double here. For a little, that's a short counter trend play. Very short. Because, see, that's the move that started it. You have it right there. Not where, if you're on the bigger time frame, those not worth worrying about. What else? Nice little rally in the yen. Interesting enough, Japan's had to keep intervening pretty much every day in their JGB markets, and it's closing in on that thing again. But we had the yen rally. I'm starting to watch for now the strength taking it into the daily rotation zone. So I know some people are interested in starting to explore forex more, and here's your 132.62.8. Right now, 132.67.2. So no technical close yet above the 62.5. Why am I watching that? Because if we do break back down below the 50, there could be a potential retest of this low area, rotation down. But we follow through. It takes us closer to the other side of the daily rotation zone. So it's not yet being aggressive and looking for short setups. Euro double top. No, it did not get stopped yet. Still in play here. So nothing's changed with that. Pound. Nothing's changed really with that. Bitcoin tried to get a little move on and dropping back into consolidation. Tesla, which was up 5% today, stalling out at that first, the 50% harmonic, which was right around that 114.60 area. So, no, this is not a double, by the way. It's a horizontal triple. By the way, the next key targets I'm utilizing on follow through tomorrow, if it does get follow through, are 118.75, and then it would be to the gap fill. And that still does not trigger the double. If we start breaking down below about 111.50, though, we're into a clear path move. And my first target's back to 109. Now, what else did I miss in here? Is there a 15-minute head and shoulders on Apple? A 15-minute. No. Why is this not a head and shoulder? Shoulder, head, shoulder. Why? Because that is a reversal top. And it's only reversing this amount of move. So all the targets would be beyond the move that reversed it. That it's reversing. So this cannot be a head and shoulders. It's not reversing a big enough move. Because also if you break down, your targets are essentially the lows. It's not even head and shoulders targets. So no, there is no head and shoulders there. Royal Palms, can we look at CCL? Carnival Cruise Lines. Just seeing if there's anything, that's sort of interesting. Oh, that's sort of funny. It's rising on add-on prices. That's sort of funny. There's just I just be careful about chasing this higher. I'd be watching if it does follow through. I'd be utilizing this 932 as a key if you're trying to play this alongside. Other than that, I'd be watching for a potential next rollover play for the time being. Now this would be this could turn into a sloppy inverted head and shoulders at some point. It's still very early. So that's about it. If you want to look, and then if it does continue above 932, the roll back over zone would be 951 to $10. So they would be just short-term plays in there. I was in an $8 JN13 call, but sold out of fear of whipsaw. You know, this is a really forced trade to me just yet. You know, there's better things to still trade. This was not a strong bottoming pattern. This is just ramping up off projected price increases. into a potential recessionary environment. And then you still have the weekly rotation zone against it. So these pops can be very short-lived. Personally, I'd look for better things to trade. Because you don't understand why the FOMC meeting minutes are nothing burger, because there's information in the meeting minutes that can clarify potential future, how they're viewing things in the future, that were not conveyed in the press conference. Okay, because you have, remember, the meeting minutes involve all the participants and their viewpoints on it. That's why they mean something. Now, there's plenty of instances that it just reiterates what was roughly said in the press conference or what was expected, and it is a nothing burger. But today's were, I mean, I still don't think the market's digesting how hawkish the Fed's still trying to come across. There wasn't a lot of dovish stuff in the meeting minutes today. But the market, to me, is not believing it. By the way, I talked about it earlier. There's your yield curve pulling back. Look at this with even the rotation zone. Look at this. The rally, the breakdown zone, declining rotation zone, smack dab, topping bar, blip. So, does technical analysis work on this? So my next focus is the minus 70 basis points again. We get a close below there. I'm watching for the retest of the low area, which could be interesting because then we could get a nice, really big double bottom. Was that a dog walk? Well, where are your priorities, Sterling? With the dog? Which would make perfect sense. Was there a very sloppy head and shoulders on the ES and the 15-minute? No. Unless I missed something. The 15-minute? No. Oh. This? No. No, 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 no. This is not a head and shoulders top. No. That is just because of this big sideways and the drop, trying to make the shoulder. That would be very forced. It would just be a breakdown play at that point. That would be horribly forced. Also, CS is on a tear, and AMC has another potential double bottom on the daily. Looks like it's primed for another dead cat bounce. Yeah, I'd be watching for a topping move. I mean, this would be just a short-term play if it follows through. I'd be watching, more concerned that this thing's going to reverse back down, slamming into major overhead resistance. I'm getting really picky on plays this year. AMC, what are you? Ugh. Don't bother trading that as a double. It's just a Mr. Yuck pattern. All right. I can't get through a lot of stuff today. I'm hurting, guys. Amazon. Still, this is still not officially triggered. So nothing's changed with Amazon. Uh, Interesting enough, separate from this little pattern, if you do break above, really, if you break above this the daily rotation zone, you could finally get the pop. It's just you're headed into overhead resistance with multiple stopping points. There is a gap left behind, which could be a magnet, but I'd wait. I need to wait for a breakout play in this at least, especially with the markets where they are now. My advice is don't force any. There's always another trade in Square. Ugh. These things are, and I'm not going to go over like 5 or 10 minute, 1 hour plays on these, but they're just. I'm just looking. I mean, this is just range bound, so you're either trading support resistance. Other than that, getting to the toppy area again in terms of cycles and overbought. This is a mess. So unless you're going to try to really short-term trade it or even short-term swing trade it against support resistance, there's not much there. Which you can do, but it's a lot more challenging. We can address that later, Connor. And it doesn't matter if it's an iron condor or a condor. You're going to structure it roughly the same way. I like to use, since I like to use key levels, whether they be major support resistance levels coupled with harmonics to structure it based off of where your wide body is on the condor. Personally. CS, not C. Oh, what did I do? CCS? CCS, Credit Suisse. I won't touch this from the long side for anything. But yes, that is a double. That pretty much played out. It played out definitely to the conservative ones. I won't touch this right now. I'm waiting for another drop on the higher time frame. There's no double here. If it continues up higher to targets 343, this thing's gonna. Credit Suisse is just horrible. It's almost like trading this at this point. Why? This thing's gonna go into restructuring at some point. I mean, people trying to trade this stuff. Yeah, you can get little pops and everything else. You're just always at a risk of a rug pull thing. And the big thing with AMC is they're going to restructure. There's another one that's going to get restructured this year. It's just when I sometimes get migraines, it's really tough. Sorry about that. So I was just trying to get through some stuff. But what I'm seeing is there's not. Oh, I wanted to touch on something else because a lot of people are focusing on semis today. Semis just moving back into the rotation zone after a pretty substantial breakdown play. But if you look at stuff, people are like, oh, I missed a move in NVIDIA. What did you miss? You had a sell off yesterday, today, inside bar. If it pops, look, the targets to the upside, 153 to 154. Yeah, you can play a little intraday pop if you want. I'm more geared up on a number of these things unless they really change their patterns for a rollover play. Now, we start getting back above 168, it could get a little interesting. But these things, people were seeing the big, like NVIDIA up today, 300 basis points. And it's like inside bar from yesterday, still sideways move with a declining rotation zone and a rolling over 50 with insane valuations. Not interested. That's what I'm really not finding a lot of fantastic setups at the moment. That's what else is interesting from the bullish side. I'm just not finding, other than the, yes, we can get some pops, but they're popping into key resistance. You know? Look, even if you get a bigger pop in TSM, it's slamming into major overhead resistance. And I think some of this is going to get very interesting for rollover plays once earnings season starts. But we'll have to see. I'm just not finding the setups right now. That's why I'm not looking to force anything. Because a lot of trading seems very forced. No idea. Cannot answer that. I cannot answer that, Connor. You're welcome, Sterling. Yeah, weekly, I was going to mention that one. But you know why I like this? Because you sit and collect the dividend. You sit and collect a dividend after it came down. You know, this Intel's some of the better trading than what other people force. You know, because what did you have? And I don't cover this every day. Maybe I should just start it because this was pretty fantastic. Little double bottom, 4 hour, triggered. Easily could get in on the trigger or even that pullback move, which did not invalidate it. Finished the double. Now, can you easily, if you're trying to trade this around the core position, hold for a little longer or exit part of it? And then hold a little more, especially with a run up, you know, possibly into this 28. Although this move today pretty much was running it out of steam against the 50 and against the breakdown zone. But this is the kind of stuff. Why? Because you can trade a core position. Fantastic little entry here. Exit part, exit the rest. You know, next pullback move. Or if you didn't have any, use this to get in something, exit a little something, and then hold. And if it keeps running, hold on to it. Hold on to your remainder. You can always add back in if it gets above key zones. Otherwise, you're just sitting on it, waiting for eventual bigger move. I mean, this fantastic. Yeah, it can get earnings compression. Yeah, we got earnings coming up. But if you get earnings compression, it's already trading at 8 times earnings, P to E. What, you think this thing's going to zero? Intel's not going away. So, would I be trading Intel over NVIDIA? All day long. But Intel's not sexy. NVIDIA is. But why would I be with no great patterns, with a 0.11% dividend yield, and I know it's still a growth, but it's not going to be growing at the way its P to E at 61 is? No. And you don't get to collect a dividend. So this is why I talk about this. This is something people should focus on trading. Thanks for bringing it up, Sterling. I should have brought this one up today. You'd be better to focus on something like this than a lot of this other crap out there. At least from my perspective. But it's not sexy, but it's good trading. And you're not going to have a trade every day. You just wait for the decent setups. Look, remember when we said we were back below the 62.5, watch for a return to the 87.5? What'd you get? A return to the 87.5 with a little double bottom. There's a trade right there. And if you're trying to roll it into something longer, you get to collect nearly 5.5% dividend yield. Ted asked me about that tomorrow. When does earnings season start? The official kickoff. Here you go. And then I'm wrapping this up. I keep saying that and I don't. Here you go. Earnings season really kicks off the 13th. The banks really kick off earnings season. Yes, we'll get a couple things before that, like, oh, there's Bed Bath and Beyond junk. You'll get like things like Albertsons, which is a key earnings play. You know, you got Tilray in there. But this kicks off your earnings season, the 13th. You got Citibank, Bank of New York, Wells Fargo, BlackRock, Delta, Bank of America, United Health, JP Morgan Chase. That's when we start focusing really, because a lot of these can start moving the markets, especially when they're all releasing on one day. Like if banks all beat or miss, market moving. Then you got like Goldman Sachs the 17th, and you got some Morgan Stanley. Interactive Brokers, favorite broker. Then you roll into PNC Discover, Alcoa, which used to be the kickoff of earnings season, but the banks trump that now. Then you got Netflix. Apple's not on here yet. They haven't officially announced, but they're targeting, I think, around the 26th. But then you got Tesla. Apple could be 26. Microsoft, I haven't seen announcements for them yet. But these, kicking in through here, through the 13th, through, the beginning of February, you got your heart of your earnings season. All right. Thank you, Sterling. Okay. I shall talk to everyone tomorrow. Thanks for tuning in. See you at 8 a.m. Bye.